Hey guys, Lee here. Look, I've been doing some analysis on the weekly chart of the German DAX. I want to discuss it with you and show you my findings here. Now, we wake up every day. There's always some bad news about the economy. You know, growth is slowing. We've, of course, got the Venezuela situation, US invading Venezuela. We've got all sorts of bad news. But the stock markets, the FTSE 100 is above 10,000. The German DAX is making record highs. The Nasdaq is slowing a little bit. The Dow tried to push higher, now reversed, but we're still around those highs. So the stocks have been so bullish. It's been great to trade to the upside. But let's just see where we are in time and price right now, because there's a situation happening here on this chart that is setting up, which could be a very nice profitable trade for all of us. And of course, look, I'm not giving you any trading tips here. I'm just showing you what is happening on a chart. And the same setup, the same strategy made us over 100 points trading the German DAX in our live trading room this morning. Now, for some of you, divergences is a bad word, because a divergence means you're selling the highs. If you know how to trade divergences and know what to spot, you can make some really nice returns, guys. But you've got to know where you are within the trend. Now, I would say, let's start by saying that we're not starting a new trend here, are we? You know, the trend started down here in the German DAX back in 2022. We had a lovely push higher. And so where we are now in price is not a start of a new move, all right? Now, if you look down below, let's work through divergences. Now, divergences, price makes a high, pulls back, and then your momentum this is the storyteller indicator we use here at Trading College. You can use any momentum indicator to trade divergences. You see a move up, but it's not, it is the divergence I'm talking about. What I'm saying here is the opportunity of where we are in this market at the moment. But we make a new high. The storyteller histograms make a new high. We peak. We sell off for several weeks, then completely recover, break out to new highs as well. Okay, so we break out to new highs. The storyteller indicator signals these yellow lines, telling us there's a little bit of divergence. What that means then is that price sells off just for like 1.5 weeks. Not a major reversal. And you can see here that this high is lower than this peak. Price comes down, and then for the last several months throughout the summer, we've literally gone sideways in the German DAX. Now a sideways market that is within the trend, okay, it's just telling us that prices are overlapping here. There's no impulsive downtrend. It means that price is going to continue up. Zigzag type pattern, and we continue higher. I mean, it's been pretty slow and sloppy to trade, and it's broken out to new highs. Now, as soon as we break out to new highs, what's a breakout? Well, it breaks above the previous swing high. Price has done that this week. It's broken above the previous swing high. Now, what I want you to do is look down, not look up, okay? Now, look down on your momentum indicator. I can see down below here that this is way down here. Now, once again, we had a same setup on the 1 hour chart today in the DAX, which made over 100 points in our live trading room. I'll show you that in 1 second. So we make lower highs, but look, it's not something like this where it's just a little lower high. This is extreme, guys. This is an extreme loss of momentum as price goes higher. Now, we had one very similar here back in July 2023. We broke out to new highs, and then the storyteller indicator was so deep lower, okay? This one here. And then we sold off from July 2023. We got sell signals, let's say 16,000. It got down to this low here of 14,500. So well over 1,000 point move. Really nice trade if you saw that. So we're in this position here where we're breaking to new highs. Now, we're not at the start of a trend. We're at the potential end of the trend. Now, and I'm not talking about there's a potential for a short trade in 6 months' time. I'm talking about potentially next week and the end of Jan and into February and maybe even to March. Okay, so it's upon us right now. Now, extension. Let's have a look at the 1 hour time frame and show you that trade strategy today. Okay, got that chart. Now, you can see we have buy signals after buy signals, and you know the DAX has gone up from the start of January on the 1 hour time frame. Let's delete that, all the way up here, all the way up, higher highs and higher lows. You know, the trend is pushing up and up and up and up and up. And then we come in today on Thursday, live trading room. We get this hammer candlestick. We explode higher on the 5-minute time frame. The DAX breaks out above new highs, okay, on the 1 hour time frame. And then we all look down. All right, so look down. And as you look down, the histograms are much lower. So the high to here, the breakout point, you measure that, is much lower. So it wasn't going to continue. And so we started shorting this market on a smaller time frame, and it gets down to support and we bank a really nice profit. Now, this area here, which I'm going to circle for you right here, is exactly the same as what the weekly time frame is showing us right now. We've got a bullish uptrend. Okay, we've got a couple of divergences as we push up, insignificant ones, maybe just a couple of hours down. But then we make new highs. We look left. We come from a rather large uptrend. And you can see that the storyteller indicator is much lower. So the question is now, being the 1 hour time frame, do we sell off in this area here? Now, if we sell off here, then we could be making a top in the DAX, okay, for maybe a few weeks, maybe in a few months, maybe for a few years. I don't know. I don't know where the market's going to go or be in 6 months' time. I'm just looking at the location of where it is right now and looking at the potential opportunity. So let's go back to the weekly. And this is where we are on the German DAX. We are breaking above new highs. Now, we could use also something called the Fibonacci extension tool. And I'll actually use the 127 Fib. And if I take it from the breakout area, because this was a breakout high, previous breakout high, and take it to the swing low, just so this swing low is fine, the 127 is often an area where divergence reverses. And you can see here that we're virtually at 25,279. We're literally banging our heads against that today, this week. Okay, so we're in position. Something could happen and react around here. I don't know when it's going to happen. I will use the Pro Trading system on a smaller time frame, like a 4 hour, 1 hour. When they turn red, I will short and see. I personally think that we may just continue up a little bit this week. And then next week is going to be a cracking opportunity. I'll be all eyes on that and see. Now, if we go to the 1618 Fib extension here, very rarely price gets through there on these two-wave divergences. In fact, it's not a two-wave divergence. It's what we call a three-wave divergence. Because if I count this first circle, that's 1. This second one is 2. And this one's 3. Okay, so we've got three-wave divergences. Price tends to react when there's a three-wave divergence. In fact, the stock market, bull market started on the Dow. We had a very similar bullish divergence back in 2009. It started the whole bull market. We've not looked back since. We've had hiccups along the way with COVID and so on. But, you know, it's just been relentless to the upside. I don't know what the catalyst is going to be for this market to have a correction. And I said, this may not be the end of the world, but the correction could give us a couple of thousand points. And for a trader, you know, as a day trader, swing trader, then I want to be spotting those opportunities. And I think we're really early and we're really in amongst it, and there's plenty of opportunity. So the trigger, I'm not talking about trigger of the guy from Only Fools and Horses. I'm talking about the trigger to get into the trade is going to be crucial, and managing the risk is going to be crucial. But I would say if we do start to sell off with this pattern like we did today on the 60-minute two-wave divergence, then it's going to be a cracking trade. Because if we can get it back down to these lows here, that's 23,000. Well, we're trading at 25,000. That's 2,000 points. And you never know, it could progress into a bit more of a sell-off. Let's see. I don't want to be too negative. All I'm looking at is the price on a chart and the pattern I'm seeing setting up that there is an opportunity for all of us. Manage risk. This is not advice, guys. I'm just showing you what is happening on the chart. All right. Just be careful up here. Trail stops if you're long. Let's see what happens over the next week or so. Now, if you want to keep an update on this, don't forget to subscribe to the channel, guys, and give us a like if you're liking this stuff. And also, you know, take a look at the funded account. What I would do here, literally, if I didn't want to risk my own money, I'd open a funded account, I'd wait for a trigger, and I'd literally trade the funded account, and I'm only going to be risking $200 to pay for the funded account. All right, that's the sort of thing, you know, you could do, and not risking a huge amount of money of your own. You're using the funded account to trade and pass. And if you're trading a funded account that you've already passed, then you can use that money as well. All right, just a little bit of direction. Hope it helps, and I'll speak to you soon.